Hey, welcome to the Monetize. I'm your host, Tim Conley. And one of the things that I think is really critical and what this show kind of covers is the freelancer to founder. There's so many people that I've seen that just get stuck. They're busy doing labor. Even ones who claim that they're running an agency are really just glorified freelancers hustling, trying to gain escape velocity. They're not getting out of the atmosphere. Most of them just haven't even launched their rocket ship of a business yet. And one of the reasons I brought Pedro Moreno, the co-host of this show, into this is because he is the epitome of going from freelancer, struggling to get clients off of Upwork for low dollars, and actually building a real company, going from that freelancer to founder. And that's what we're going to cover today is escape velocity, how to do it, how you're able to break free and gain real financial independence, financial freedom from the business that you're doing right now.
Yeah,
Sound
Tim.
good?
Yep. It does sound good. And where I found myself stuck was on that transition from solo practitioner to having a team that would help me with labor, and then having like a higher perspective of what the business needed, and is going to need also, along with our perspective for the future for Lumen, and what my role is going to be there. So the thing that I'm struggling with the most at the moment is taking my hat off as the person in labor, meaning I used to edit and now have help for people to edit the episodes that we do. Now I'm project managing and also being the owner and having like the vision and stuff, and it has become a little bit overwhelming.
Right.
So I guess like it applies very much to me, where I need to steer away from these sort of like shackles that some freelancers have put themselves in, to the growing pains of becoming an agency owner. So what's that sort of like that change implies in your mind? I mean, what takes someone from being a freelancer to a proper agency owner?
Okay. Part of it is what you were describing, these different roles in the business and learning how to compartmentalize. So you have technician. Freelancers are really good at that part,
Yeah.
right? They're good at their job. But then there's manager, that's the next compartment. Then you have executive as the third compartment.
Mhm.
And then finally, the fourth compartment is owner. Owner makes a lot of different decisions than any of those other three roles. And learning how to determine what decision needs to be made in that moment is really hard. It's a skill set you have to develop. Do you need to make a technician decision? Are you making a managerial decision? Like, I'm going to do this project right now and do this other one later today or tomorrow. I'm going to put it over to there. Or are you making an executive decision? I'm going to invest in this service, or I'm going to invest in this marketing, those kind of decisions. And then as the owner, it's like, where is the money going? Where is the asset value being developed in this business? And most people never enter the owner compartment.
Right.
I've seen businesses doing $5-6 million a year, and the owner is still at best an executive, and a lot of times mostly a manager, where they're just trying to manage the systems that they've cobbled together, and they've never looked at how much value does the things we are doing in this company get added to the actual shares of this entity. Will I be able to sell this thing? Will I be able to get some future value from it? In most agencies, they never have that thought, And so they never build asset value. And so then one day they're tired. They've been doing their thing for 15 years. And they're like, I'm going to retire. The business has been doing $2 million a year for the last 5 years. I'm going to sell it.
Right.
And then they find out no one wants to buy it. It's like, this thing makes $2 million a year.
Yeah.
And no one wants it.
Okay, so you just touched on my next question, which is, it is very, very evident that there's a clear difference between being an owner to a freelancer. It is a complete, I would say, change of skin even. You have to shred the skin that you were on as a freelancer or as a solo practitioner. Now, let's say that someone made a decent amount of money as a solo practitioner, and having in mind that becoming an owner is a painful transition, a needed one,
Yes.
but a painful one. Why would someone want to make this transition? Is it just to level up?
People have different desires over why they want to become an owner.
Mm-hmm.
Some, it's just about the belief that it'll turn into more money.
Okay.
That,
Like an asset.
which is fine.
Like you described.
That's a
Right.
good enough reason.
Mm-hmm.
I want to make more money. And you will get capped out no matter how good you are as your solopreneur position. You will cap out as to how much money you can make.
Right.
There's no way around that. With a business, there is no cap. The cap is how much you can enter that market, how much market share can you gain and dominate. That's the only cap to the business. So you could build an agency that ends up doing hundreds of millions of dollars a year.
Right.
So more money, good enough reason. Some people believe that a business is going to gain them more freedom.
Mm-hmm.
And it can, if you build it correctly, it will definitely give you more freedom. There's an old saying that says, if you were hit by a bus, would your business survive?
Right.
Right?
Yeah.
This is the hit by the bus problem
Mhm.
is something a business can solve. A freelancer gets hit by a bus, that's it.
Right.
No more income.
Yeah.
There's no more asset value.
Right.
It's 100% gone. If you're stuck in a hospital for 6 months recovering, you're not making any money.
Yeah.
But with a business, that goes away. So you gain a significant amount of freedom. You also lose certain freedoms because you don't get to just work on what you want to work on.
Yeah.
You work on what the business needs and
Right.
not what you desire. So that's a big change. That's a freedom that you do lose. Then there's the main one that is, I guess, really ignored by everyone, and that is being able to sell the business.
Right.
Asset value. Are you building value in the company so that one day someone will buy it? If you're a freelancer, not going to happen. If you have a small team, you and a small team, you're not selling it. If you build an actual team, a company that runs without you, where you step into a true ownership role, you can sell that. And someone is going to eagerly buy it.
Right. Yeah. For instance, for me, one of the main reasons was that I was a freelancer for quite some time, but I realized exactly this that you're describing, which is there's a limit to the amount of hours that I can work in a day. And what happens whenever I take some time off? Like, I need to be logged in every single day, every single hour to bring the dollars home, at least with the model that I had. So like my first reason was I have to bring some help in. And then that allowed me to free up a little bit my mind and say, okay, what can we actually do with this business, which is going to make me proud, aside from making money? Like, am I in a position, or can I be in a position where I can make something sort of like that transcends me and becomes something else? That is something that I really like about podcasting. That is a form of expression for many people, and I think it is like the equivalent of becoming an author nowadays. So that is something that I really like about the business that we're in. So when we talk about asset creation, how can someone who used to be a solopreneur, a solo practitioner, frame or design their business to be an asset and to make that amount of money?
Okay. Part of it comes down to your billing, the way you make money, where most people, they figure out like how many hours are going to go into a project with a client, and they go, oh, I want to make X dollars per hour. I want to do this. So here's what I'm going to charge.
Guilty.
Right.
Guilty.
Right. And so it's like, oh, I want to make $100 an hour, and this project's going to take 10 hours. $1,000
Right.
is what I'm going to charge.
Yep.
But then you completely forget about taxes. Oh, there's 15 to 20% right off the top. Oh, I got to pay for software. I've got to pay for electricity.
Yeah.
I've got to pay for all these other expenses that are related to doing the work that I do for my client. Well, there's probably 15, maybe 20% in expenses that you have. Well, we just knocked off probably 40% of that $1,000 to where at most you're going to get to keep $600. So you made $60 an hour, not $100 an hour.
Yeah.
And then, oh, it takes more work than I have available. I got busy. Something happened. Something got in the way. I need to hire somebody to come in and help me.
Guilty.
Okay. Well, I have $600.
Yeah.
That I've just given $300 to this other person to come in and do something for me. So now I got $300, which now I've just made $30 an hour. But I probably had to do more hours because I had to go find this other person to come help me, and I had to manage that person. So I probably put in 15 hours instead of 10 hours.
And that
Right?
that is not even like money that's in my hand, for instance. That's money for the business, or
right.
Yeah, that the business made, not even me.
Right. So you have $200, so you're going to have to give that because you paid this other person, and you basically made $20 an hour, and you're going to pay that to yourself. And then you wonder, well, why am I not getting ahead? Why can't I get ahead? So if you never sit down and write on your pricing sheet of how you're going to price this project, if profit is not like the very first thing you write down, I want to make 30% profit.
Yeah.
It's like I have my rule of 1/3 that I just use to see how healthy is a business. And owner discretionary earnings should be 1/3 of the business.
Right.
And so you need to have that right off the top. Like there's going to be profit here. Now, after that, what are my business expenses? I have to factor in all business expenses, not the ones I have today, the ones I'm going to have tomorrow.
Oh yeah.
This future business that I'm building.
Yeah.
Not the expenses, not my cell phone, my electricity, my software, my internet access. Those are bills you have today. But what about more equipment? What about the new computer you have to give to your team member that you're going to hire in the future?
Yeah.
What about health insurance or any other expenses that are going to come in the future? You have to start pricing that today. You have to factor those things in today. Then you can then finally you factor in the team and all those other things that you're going to have. And so it uses up the other 66.6% of the revenue that you're going to charge a client.
Okay, but we have talked before about how much your self-confidence comes into the pricing for your business. But from what I'm hearing is, say, for example, I'm charging for a bundle of videos. Say I have 4 videos that I'm selling for a client. Then I'm going to factor in first that 30% profit that is for the business or for me, right? I'm going to factor in the hours that the team is going to work on this, and I'm not going to be like very precise, meaning if they work 5 hours, I'm going to charge those 5 hours. I'm going to try and charge for like at least 8 because something always happens.
Yep.
Another item is going to be overhead, meaning expenses like software and different tools as well. Another item is going to be taxes. And am I missing one?
So remember the compartments.
Yeah.
So owner, well, that's profit.
Profit. Yep.
Right?
Yep.
Executive, that means who's running this company.
Right.
Then we have manager, who's making sure that the technicians are doing their job on time, on budget, and high quality. Then we have the technicians. So you said team and what they were working on, which could imply the manager and the executives.
Yeah.
Could.
Yeah.
But in reality, you were probably thinking just the technicians.
Yeah.
And not like the project manager who's making sure that the technicians did their job properly.
And definitely not the executive, right?
Right. And definitely not the executive who's having to make sure we go out and get new clients. We do marketing, we do advertising, we do sales, like all those other functions still have to get paid for.
Okay.
And the thing is when you're brand new, and I can hear it like coming through the show, like the person listening right now, I can hear them saying, but I'm nowhere near that. Like there's no way I could charge those kind of fees. Like I'm barely getting a yes off of the fee that I charge just for myself. How the hell am I going to actually make that kind of money?
Yeah, I mean it's like it may be even like 8 times more than whatever you're charging right now.
Right.
Yeah.
Yeah, and that's the part where people freak out and where I came up with the concept of client stacking.
Yeah.
Where wherever you're at right now, whatever clients say yes to right now, that's stack 1. This is the floor. Everything like from here on out, like this is the floor. We're not charging anything less than that.
Right.
But we're going to go out and get a new stack. And we're going to charge at least 25% more. We're going to just, the next project that comes in.
Yeah.
Next prospect, you're going to go, okay, I normally charge $1,000 for this. I'm going to charge $1,250. I'm just going to tell them that. And just say the number and shut up and wait for them to say yes.
Yeah.
Right? And then I'm going to do it again. The next prospect after that, I'm going to say $1,250. And then the next one after that. And I'm going to get 4 of those, 4 people to say yes at that 25% higher amount. That's what I'm going to do. That will start giving you the confidence when people say yes to the higher number. You don't say, well, I used to charge $1,000. You don't tell them that because they have no idea. They're a prospect. They have no idea what you charge.
Yeah.
So when you say the number with confidence and you have had the conversation with them and you know what their budget is, then they're going to just say yes in most cases. If they say no, well, now you got a little more work to do to find out why they're saying no to get them to a yes or a truly definite no. Most people, they crater, they hear that no, and that's it. They crater and they give up. You're going to continue to stack new stacks of clients at a higher and higher rate. At some point, you're going to start getting more no's. And the unconfident, is that even a word? Somebody who lacks confidence will get to that point where they start getting more no's from their prospects and go, oh, I'm charging too much. And you're not. You have just reached the limit of the market that you've chosen. So the types of people that you've been attracting and bringing in, you've just reached what they think is a fair price. I guarantee you there's another market in the same vertical, like whatever your industry is. You're a graphic designer and you're tapping out with these certain types of businesses. I guarantee you there's another one above that. And then there's another one above that and another one above that. Because eventually you could become a graphic designer who gets paid $10 million to make a freaking logo. Granted, there's more to it, but you make a logo for a big company and your agency charges $10 million to do it. Like you started off as a graphic designer for $100, for a drawing. And then now you're charging $10 million because every time you got to that limit of a client stack, you just went looking for the next market. His markets stack. There's the low end of the market, like the super low end of the market, and then there's the low, and then there's another stack and another stack, and eventually you're at the pinnacle. But by the time you get to the pinnacle of the companies that you could work for that would pay you tens of millions of dollars, you've got a massive company by the time you get there. That's how you build it. Like that's the basic structure of what you need to do to get there.
And I would like to say something out loud that is both a reminder for audience members and for me, which is as you grow and as you client stack and as you say that price 25% higher, remember that what you're talking about is resources to better your business, essentially. Because, for instance, one thing that I'm encountering in my business at the moment is that we may have a very premium package, but lack the structure, meaning the team, to be able to deliver it in as pretty as a box as it can be delivered in. Because as the owner, I am wearing too many hats because I don't have the enough resources to give those hats to other people that will make that process seamless. For instance, I haven't factored in that executive and that manager into my my billing, so I have to take those with me. And the thing that I'm learning the most this week and with this episode as well is that I do need to bill for the business that I need to build as well. Meaning, if I want to hire a project manager, then my next client is going to have that as an item for me in the pricing, because I'm planning to pay that person in the future. And I'm trying to have the resources available to me before I hire that person to be able to do that. And with that, I'll be able to have a better product as well, and to have enough resources to essentially build a better asset, which is the business that I'm trying to build, and not just taking that money home for me. That is like a big distinction also between freelancing and being an owner.
Yes, a massive distinction, because the freelancer's billing for themselves.
Right.
maybe there's a really smart freelancer and they're charging enough to pay taxes and pay for their expenses
Right.
and then pay for themselves. I've met a few doing great work out there. They're pretty rare. Most people don't charge enough to cover all the things and the lifestyle that they actually want.
Right. Okay, Tim. So, for example, with this first stack that people are going to bill for at least their labor and meaning like their technicians and at least like a manager, that first stack is going to mean for their business like their baseline, right? But
Yes.
for a healthy business, do we need like what do we need on that next stack?
Okay. So you mentioned baseline.
Mhm.
So I guess we need to define it. Baseline is the minimum expenses that it takes each month to pay your bills, to pay the business's bills, and to pay your personal expenses. That's your baseline. That could be $500 a month. It could be $500,000 a month. Depends on how big your business is, but it has a baseline. And a baseline can also be defined as a burn rate, but a burn rate can also include luxuries. In the startup world, they talked about burn rate, but that usually included a lot of luxuries, not just full-on necessities, which is what a baseline is. And then your capital, your cash on hand, the money you've got sitting in the bank, whether it's in the business sitting in the bank or it's in your personal account sitting in a bank account.
Mm-hmm.
This is your runway. This lets you know you divide the baseline into your cash on hand to determine how long is your runway.
Okay.
Which means this is how long this business can survive. This is how long I can survive
Right.
with the amount of money I have saved versus the amount of money that I have to spend every single month. Right? If you get this dialed in, then from there you've got your baseline, minimum expenses. When you go to add an expense, well, then your billing has to have that new expense added in
Okay.
because your baseline just went up. You have to add that in. Most people don't do it. What they do is, and you did this, I remember this.
Oh.
Most people, what they do is they add the team member because I
Yep.
need somebody working on this project.
Yeah.
And they keep the price the exact same.
Yep.
They didn't add in the expense.
Mhm.
And then they go, "Oh my gosh, I'm working my ass off and I didn't make any more money. Matter of fact, I made less money than I was making before I hired all these people."
Talk about a burn rate.
That was me. Yeah, that was me in my agency.
Mhm.
When I first built an agency, I was making like about $100,000 a year, and then I was like, "Oh, I'm gonna build this big agency. I'm gonna be cool. I'm gonna be one of the cool kids."
Right.
And I started growing the team and growing the amount of money coming in. And then at the end of the year, when sitting down with the accountant doing taxes and figuring out, well, how much money did I actually make this year? And it was the same amount of money, $100,000.
Meh.
And I was just like, shoot me
Right.
now.
Yeah.
Put me out of my misery. That because I didn't realize I was making the exact mistakes everyone else makes. Okay, we're charging the same amount of money, but I'm adding expenses.
Yeah.
So then, okay, I've added more people who are doing work, and then I go and get another client because, well, I've got enough people to add more work. So what I did is I fell into the trap of more work equals more work, not more work equals more profit.
And how would how would you have done that differently with what you know now in that same scenario as a agency owner?
Okay. First thing, I would have figured out my baseline
Yeah.
and refused to do lifestyle creep, or in other terms, is called lifestyle inflation.
Mm-hmm.
I call it creep because, we're in the service businesses. Scope creep happens all the time with a client. The
Right.
client's always wanting a little more for the exact same amount of money, right?
Yep.
We have this happen in our own lives. Well, I've been working really hard, and that Range Rover would make me look really cool. I say Range Rover because I bought one. Made me think I was really cool. And
Yeah.
all I did was cost me a bunch of money. So I let that was one of the main things that really killed me and that made me work a lot harder was I just kept spending more money. Even as my company made more profit, I just spent it.
Okay.
I didn't keep it. I didn't have a real vision for the future. All I thought was, okay, I work more, we get more clients, we make more money. When I figured out that I was not making enough profit with all the work I was doing, I just made sure there was profit. Like I changed my billing and expense structure so that I had more profit. But then I just spent the profit.
Okay.
And so I was literally still trapped in the business for years. Like I stayed in this trap because I just increased my lifestyle to match the income. And this happens to like 99% of freelancers going into founder.
Okay. And it is important to have that baseline, to have this runway also that allow us to have like a bigger number in which both the business and ourselves are going to be able to keep going, even if something incredibly rare happens as a global pandemic that halts everything to a pause. But then that runway, does it allow you to think about the business more as an asset? Are you able to fire yourself from some positions that you don't need to be in? How does it translate to being like a better owner and having more assets?
So the reason it's called runway, it's like an airplane. The bigger the airplane is, the longer the runway has to be for it to get off the ground.
Okay.
So if you have your small business, like a little tiny plane,
Mm-hmm.
right? Your runway doesn't have to be very long, maybe 6 months worth of baseline.
Okay.
And you've got enough money to handle problems that are definitely going to arise in your business. Like a thing that I've seen over and over again is guys are really good at their job, hate their job, want to go off on their own. They go out and they get like 3 clients and they're working in the evenings. They do their job all day and they're working on their client stuff in the evening. And then they get just enough to cover their bills. And they
Mm-hmm.
go, I'm quitting. And they quit. And the very next month, 50% of their revenue's gone because the clients left.
Yeah.
Happens like, it's almost like preordained, like fate.
Right.
That
Yeah.
has you tempted fate and fate laughed at you. And that's why runway is important. Runway is how long can you survive as a business, as an individual, before that plane has to get in the air.
Yeah.
Right? So the bigger the plane that you're trying to get into the air, the longer that runway has to be. That's why so many startups go out and raise capital. They go out and find venture capitalists to give them millions of dollars because they're trying to build a very big plane to take off as fast as possible. Right?
Right.
So
Yeah.
for a freelancer, the good news is your baseline, you can trim that thing down to just a few $1,000s a month.
Yeah.
And you can have a runway that's 6 months long. that better to have a 12-month long one, but you could do 6 months and be pretty safe, because then if you do quit your job, you've got a couple of months later, you lose half your accounts, you still got 3 more months, or maybe even a full 6 months still left in the bank for you to figure it out and get that 50% revenue back, so that you're not eating away at your runway. You're not eating away at your savings, which they call burn rate. Like, you're not burning it just to try to get into the air. Like, the longer that money just sits in the bank account untouched, the healthier your business actually is, the safer your life actually is. And it gives you that true chance of escaping being trapped, to actually be able to build freedom.
Okay. So let's bring it back to billing. So
Okay.
what we're talking about here is we should take the profit that the business makes and say that we're at a stage that the business owner is taking 100% of that profit for him as owner, essentially.
Yeah.
So
Well,
this
100% of revenue, there's no profit.
right, yeah, 100% revenue. Yeah. So what you're talking about is what you do with this 100% revenue is for you to have, say it's $1,000 per month, and say that your baseline is 500, or say it's $600 per month, and then for you to save that remaining 400 for the longest time, for as long as you possibly can, to ensure that you first are going to be okay, and then when you have that long enough runway, are you in a position to maybe actually invest in your business? And or sorry, no, when you have that long of a runway, at the same time you're trying to client stack at a higher stack, so you're able
Right.
to level up.
Right.
Is that right?
Yes. Yes. Okay. You want to be saving money because your business needs to have cash on hand in case anything goes wrong.
And in this scenario, we're talking business is just the same as you, essentially.
Right.
Yeah.
But it's not.
Yeah.
You cannot treat it that way.
Yeah.
You actually have to turn professional. You need to go pro. Amateurs, they treat the money as their money.
Yeah.
A pro treats the money as the business's money. And you don't get paid until there's profit.
So let's say that we client stacked 3 stacks above our baseline, and now we're able to, like, our items and our billing looks like this. We have the owner, we have executives, we have managers, and we have technicians, and then we have profit. Or first we have profit, and then
that's in the owners. Yeah.
Okay. In that case, for a healthy business, for a business that it is making money for the business to invest in the business as well, are we taking salary as executive, as owner, as executive as well, and then a chunk from profit?
The simple way is the way it's done by Mike Michalowicz in the book Profit First. He made a chart that was a formula, an attempt as to what percentages can you take.
Mm-hmm.
I highly recommend reading the book, or even just looking at the chart. Maybe we can like do it in post edit or something. Put the chart up here.
Okay.
And have the percentage of revenue as to where you're at in the business. He says anything under $250,000 a year, the owner, which, the freelancer, is getting 50% of that revenue.
Okay.
Right? Like 50% of the revenue. So if you brought in $100,000 that year, you as the owner get to keep $50,000.
Okay.
Okay? Because you have these other expenses. And even if you do not have those expenses, you say you don't have 20% in operational expenses, or OpEx in accounting, you don't have 20% of OpEx, then you just put that in the bank because you're going to,
Right.
right? So
Yeah.
if you stick to those percentages, which I've seen that they're not exactly accurate for every situation, but that's not the point. The point is, if you try to stick to those percentages as best as possible, you will stack up money. Your runway will increase while you're affording the expenses. And then the thing is a lot of people complain. They go, well, what if my bills are $60,000 a year?
Mm-hmm.
But I'm only allowed to keep 50,000.
Mm-hmm.
Yes. That means you need to find a way to cut $10,000 in expenses in your
Right.
life
Right.
because your business is not healthy enough to spend all that money. So you either have to use runway to make up that extra 10 grand, your savings account, because you're not going to touch the other percentages from that chart. You're not going to touch it if it did not get spent on its category.
Okay.
Then as your business grows, the percentages change. And this is a great tool. It's a great heuristic for you to say, okay, am I running the right kind of company? As a small business owner, am I making the right decisions for this company?
Yeah.
And you'll know because the percentages that you're spending actually line up with the chart.
Right. Yeah, I mean, I ask this because one thing that helped me a lot to try and or to change where Lumen was at was that rule of thumb of 1/3 should go to labor and 1/3 to expenses, 1/3 to profit as well. Because as a freelancer, when I turned into at least my first attempt to becoming a business owner, it was awful because exactly that what you described happened to me, which was, I added expenses with no extra cost in my billings, and I automatically lost like 2 clients out of the blue. And I drained my runway completely. So this heuristic of if you're too small, then you should focus on the rule of thirds, essentially, for you to have a more healthy business and to allow you to start stacking up while you're trying to get that runway larger and larger and larger. And our goal as well is to client stack with how many clients? 10, 8, 10,
Well,
12, 20?
I use four clients as a stack.
Yep.
It could be any number. It could be 3, it could be 10, but I found that getting 4 yeses is enough to understand what that market wants. Like if you can get 4 people to say yes to a price and for your service, then you have a good understanding of what they want, but also you know how to get that money.
Yeah.
Like you've already figured it out. So if you go and get a 5th one at the same price, you're not learning anything new. You're just getting the same price. But if you now raise your price for that next stack of 4, so that's why I picked 4. It's like 4 was enough to achieve enough understanding of what the market is willing to bear and what you're comfortable with asking for, and then small enough for you to go after the next stack and keep growing.
Right.
That's why I picked it.
Yeah. Yeah. I mean, and I especially like the small enough to go and hunt that next stack, because say your stack is like 10, then you might get overwhelmed that, okay, I'm stuck at 2 for the longest time and I still need 8 to go ahead and allow for me to say like a higher number to build a better business. I mean, I like that a lot. And also like to for small practitioners, you also You have said in the past that no work should be done if the client does not um, pay at least 2,500 a month. Am I right there?
Well, $25,000, I've said for 15, 20, basically 20 years, I've said that custom work should not be billed at less than $25,000 within a calendar year from a
Okay.
client.
Okay.
So there's a term called minimum engagement fee. So what are you willing to take as the bare minimum?
Right.
And I look for 25,000. When I started my career, I started at 10,000 because I did my level of math. 10 times 10,000 equals 100,000.
100,000. Yep.
Genius level math.
Yep.
Right. And so that's literally how I picked it. But then I realized that to build a company, $10,000 was great for me personally. But if I needed to build a company, I needed to cover a whole lot of expenses.
Yeah.
To be able to do that. And then I also needed profit. So I couldn't just double it to 20,000. Like I needed profit too. So it needed to be 25,000. The crazy thing is we've had so much inflation since I've used that number.
Oh yeah.
That it's kind of silly for me to continue to say 25,000, but the math is still really easy. 4 yeses at $25,000 equals 100 grand. And $100,000 will change nearly everyone's life. Like 90-something% of the planet's life would be really changed if they brought in $100,000 extra from what they're making right now.
Right. Yeah.
So 4 yeses, 25,000 as a minimum engagement within a year. The thing is the faster you get that 25,000, the richer you will be.
Yeah.
Because if you can get that 25,000 in 6 months, you just made money twice as fast. If you can get that money in 3 months, you just made that money 4 times as fast. If you can get that money in a month, it's 12 times as fast. Get it in a week, 52 times as fast. Right?
Dreamt. Yeah. Dream scenario.
Like, most people don't like this episode's about escape velocity. How do you get the money fast enough to escape? Like velocity, speed and direction, right? The faster you bring the money in, the faster your velocity, the faster you take off. That's something you have to keep in mind. You don't go, hey, Tim said, as long as I get it within a year from a single client, that's fine. No, it's not fine. It's the minimum. It's the bare minimum.
Yeah.
Don't. Oh, I was about to curse.
You want to curse and we'll bleep it out?
Yeah, bleep it out. Like,
Okay.
Because I was going to call people names, right? Don't do it. Like, don't go for the minimum. Like the minimum is there for you to, nut up and actually do the job. Like, this is my minimum. I will not go below this, right? Have the confidence that I'm going to figure it out. I will not go below this number. That's what the minimum means.
Yeah. You
will not go below it, which means you need to aim for higher than that minimum.
Yeah.
Try to get 25,000 in 6 months. Try to get it in 3 months. Try to get it in a week. I've had friends that charge $25,000 a week for their consulting. It's like, you get me for 5 days, 25 grand, and I'll come in and I'll work my butt off for 5 days for 25 grand. Only takes 4 yeses to make 100 grand. That's 4 weeks a year to make $100,000.
Right.
Like what would you do to go find someone who would give you $25,000 for a single week? Like, I was charging $25,000 to $35,000 for anywhere between 1 and 2 days worth of work.
Beautiful.
It's like if I'm going to come
Beautiful.
and just bust my ass for someone's company,
Yeah.
like you're going to pay for it. You're going to
Yeah.
pay a sizable fee for that.
Yeah. Yeah. For me, for example, the inspiration that I take is working on projects that are very high priced and that have a set time in which they're going to be worked on. So for instance, say we're going to do like a single season at 50K, for example, that we'll do in like 2 months, for example, or we'll do like an entire pre-production at 25,000 during the week span of two weeks, for example. That is like that is how I'm implementing this escape velocity, or this velocity of money, to better my business as well. And this is something that you know, if some people that are service providers, meaning that they do like, say, as you said, like designers or video editors or whatever they are, have the courage to at least try and say the number, shut up, and see what happens. Because many times we are just our own enemies and we are just negotiating against ourselves and not even giving the chance to that prospect to rebut or say yes even. So Tim, I loved this episode because we have so much in here that covers from people going just from freelancing, like I was on Upwork, struggling with proposals and what can I get, to having a proper billing structure in place to cover first like your baseline, what you need to be to have like a healthy business if it's just you and a couple of team members. But then you can lay out the groundwork to build a business that becomes an asset and that you'll be able to make a whole lot more money, to imprint your vision in it. And also, you know, if we can have that velocity of money, what Tim talks about so much, and that we are all trying to implement as well, and make much more money in a shorter time frame, well, that is just the perfect plan as well. Tim, nothing else?
Nothing else. Well, there's always something else, but I'm going to shut up. And we'll see you in the next episode.
See you in the next one.